What's up YouTube, it's your boy OMG Pips back again with another video, and today's lesson is a tutorial on market correlation, how you can use market correlation to find easy executable setups with a high probability chance of winning. So without much further ado, let's get into it. So what I mean by market correlation is that I use the DXY US dollar index pair with pairs that have USD in them. So we have pairs that have USD at the end, and we have pairs that have USD at the beginning. An example of pairs with USD at the end, Euro USD, and an example of a pair with USD at the beginning, we say USD JPY. So correlation works like this. DXY means US dollar, right? You can see right there, the DXY is the US dollar pair. So when the DXY goes up, pairs that have USD in them at the end, such as Euro USD, go down. So when the DXY goes up, these pairs go down. When the DXY goes down, these pairs go up. So these are oppositely correlated to DXY. They're opposite to the movement that DXY makes. When DXY goes up, these pairs go down. When DXY goes down, these pairs go up. And these ones are the same as DXY, if I may say. When DXY goes up, these pairs go up. When DXY goes down, these pairs go down. So that is what I mean by correlation. So the way we use this is we analyze the DXY and find the direction that the DXY is going. And once we find the direction that the DXY is going, then we know automatically if trading this kind of pairs, we'll look for sell setups. If we're trading these setups and the DXY is going up, then we look for buy setups. So let me illustrate exactly what I just explained. As always, I start my analysis from the weekly time frame just so I can see the bigger picture, right? So in the weekly time frame, first things first, I mark my swing levels. So these are the outermost liquidity points, outermost liquidity magnets. We have buy side liquidity right there, we have sell side liquidity right here, we have sell side liquidity right there. So when we look at this price action, we can see from this point to this point into this range, we took out this external liquidity right there. Price started moving from here, went all the way up. We took out this external liquidity, and then it started correcting this impulse move. And once it started correcting that impulse move, it came down and mitigated PDRA and this discount area of price. So what we do is we look for our first break of market structure, our first break of structure, which is this one right there. That's our first break of structure, and once we broke this structure, price came to mitigate a PDRA down here, and right off the bat you can see we had this inverse fair value gap. It's my man grass, it's my man, it's my man grass, it's my man. I like that song. So price came down, it corrected this inverse fair value gap right there, then it started trickling upwards. So we can see as we have marked these levels, we took out this external liquidity, then price came down, mitigated the internal liquidity, which means the next move is this external liquidity, the buy side liquidity. If you don't know about internal range liquidity and external range liquidity, I'll leave a link down in the description. You can check out the video. I did a video on that, and it will help you find buyers real quick. So since we have determined that we are going for this external range liquidity, which is the buy side liquidity, we know on the DXY long term we're looking for buys. We know on the DXY we're looking for buys, right? We're looking for buys. So since we know we are looking for buys, we start looking for confirmations of a bullish momentum. So the first confirmation we have is this break of structure right there. Once at the break of structure right there, price came back down, and we can see clear as day we mitigated this this inverse fair value gap. We mitigated the inverse fair value gap and actually came into this order block right there. We mitigated that level, then price shot up again. Once price showed up, we'll mark our break of structure. The next thing to do is look for internal range liquidity in here, and I can see the first PD array that I see that has potential to push price higher is this weekly order block, and we haven't mitigated it. Price came real close to it, but it didn't touch it yet, and I used the open of the order block as my entry point, so we haven't touched it yet, so we still have potential movement to the downside. So after that order block, we also have another PD array, which is this fair value gap, but unfortunately this fair value gap got mitigated right here, and that's what you would think, right? But no, nigga, no. If you zoom in, we see we have this inverse fair value gap from this low to that high. So my first entry point that I'm interested in is this order block. The second entry point that I'm interested in is this inverse fair value gap to go to the downside. Oh shit. So I'm looking at something like this. That's my first scenario. That's the first scenario that I'm expecting. And the second one looks something like this. So I have this inverse fair value gap and this order block to look for buys. But this is the weekly time frame, and it's going to take a lot of time for price to move from this level to that order block, which is why I know this coming week I'm looking for a bearish candlestick. This coming week I'm looking for a bearish candlestick. My first TP is this order block, my second TP is that inverse fair value gap. So today the date is 5th May. It's a Sunday. The first trading day is tomorrow on the 6th, and the week starting tomorrow I'm expecting price to be bearish. Once I have established that this coming week I'm looking for sales on the DXY, I know on pairs like Euro USD I'm looking for buys. On pairs like USD JPY I'm looking for sales as well, right? Yeah, DXY I'm looking for sales. XXX USD or Euro USD or GBP USD or CAD JP or CAD USD Euro So DXY I'm buying, DXY I'm selling, Euro USD I'm buying, GBP USD I'm buying, NZD USD I'm buying, and pairs like USD JPY I'm selling, USD Euro, USD GB, USD NZD, USD CAD I'm selling. So I hope that makes sense. From the weekly, just to refine my entry point, I'm going to go on the daily time frame, and since I know I'm looking for selling opportunities, I know to look for PD arrays in this movement here. First things first I see is this break of structure. Then when it comes to PD arrays, we have this fair value gap right here, we have this fair value gap right there, and we also have this order block to go short on. So either I go short on this fair value gap or I go short on this order block. And we go down to the 4 hour. So on the 4 hour we have this break of structure right there, we have inverse fair value gap right there. So the first break of structure is there, the second one is here, right? And when I see this, it tells me that this fair value gap that's on the daily is not relevant. I don't know about you, but for me it's not relevant. On the 4 hour we can see we have this fair value gap as well, but just because we have a break of structure right here and we have a breaker block in there, and we have a 4 hour breaker block right here which aligns with the daily order block, this has more power. So this fair value gap, we forget, put my break of structure right there. This is my first entry point, so I'll put my entry right here, put my stop loss right above this high, and put my TP right on this low. That's a 4.5% trade on the DXY, right? That's a 4.5% trade on the DXY. And if that level doesn't hold, if this level doesn't hold, then I'm looking to go in again. I'm looking to go in again on this inverse fair value gap and put my stop loss somewhere there. Put my TP right down there. You get me? So this is what I see on DXY. So seeing this on DXY, and to use correlation to my advantage, I'll do this. Which one is this one? Let's go GBP USD. Okay, let me just duplicate that and also duplicate that. So here I'll have GBP USD here, and on this one I have USD JPY. So since the DXY is going down on GBP USD, I know I'm looking for bullish momentum. I don't have to go too far. I don't have to go to the weekly or anything. To DXY is going down, GBP USD should be going up, right? So we go down, we go to the daily, we go to the GBP USD. GBP USD is going up. So I have a break of structure right there. We have a fair value gap right there. What else do we have? That's the only thing we have right now. I don't know how long it's going to take, but we should have something like this. Either price goes up from here or comes down and mitigates this fair value gap, then goes up. Right, let's go down to the 4 hour and see if we have more. On the 4 hour, the closest entry that I can see to go up is this one, the most recent one. We had this break of structure right there, this break of structure right there. Then we have this fair value gap right there. It's very tiny, but it is still a fair value gap. Or actually, the break of structure is right here on this high. Then we have this fair value gap, which is most likely price will find support here to go higher, while DXY finds support there, finds resistance there to go short. Or if you don't find support here, the only place that I see fitting to hold price would be this fair value gap down here, the daily fair value gap down here, but that's too far. So we'll just have to wait and see. If this fair value gap holds, we'll have something like this for a trade, at least to that level, at least to this high. DXY going down, GBP USD going up. So let's check out another one, USD JPY. DXY going down, USD JPY going down. Right, it's easy as that, folks. So if DXY is going down and USD JPY is also going down, then we look for confirmation to go short. So we can see we have this break of structure right here. Then we have that inverse fair value gap. We also have this order block right here, but I don't know if we can come up to that level, but anything can happen. So we just mark it. We have that order block right there, and for a TP, I'd say I have a break of structure right there. Then we have this inverse fair value gap. So TP1 is on this line, TP2 on this inverse fair value gap. Go down to the 4 hour, and on the 4 hour we can see this break of structure. And once we have this break of structure, you can see we have a fair value gap up here. I mean, we have this one inside here, but the first one was this one. So on the 4 hour, my entry would be something like this. Put my stop loss right above that high, my entry on the fair value gap, and my TP, like I said, TP1 on this level, which is a almost 4%. Then the second TP is damn near 5%, right?